Hello, everyone. The Prospero.Ai stock market live stream is back. Hope to see some people funneling in here. We are live on YouTube and X or Twitter. A lot of exciting topics today. A lot of topics about the biggest companies in the world we're going to be getting into. So, um, let me see your names down in the comments. If you're a first-time viewer, if you're a long-time viewer, let's get some likes. Make sure to subscribe. We crossed over the 1,000. Let's see where we are live right now for Prospero.Ai YouTube channel. We are 1,024, so we're growing quickly. We love to see you people back in here. George will be joining me in a few minutes, and we'll be getting into all of our topics in depth. But good morning, Joseph. Good to see you. But until then, let me just list off some of the things we're going to be getting into. We're also going to be ending the stream with a new segment today. George just told me briefly while we were talking. I'll let him talk about exactly what he's plans on doing, but I think he's going to be writing up some of his thoughts about how he's making moves in the market for you guys to read and get a better insight into his mind and what he's doing. So that'll be cool. We're also going to end with the model portfolio update, same way as we've always been doing. But without further ado, some of the topics we're going to be talking about today is it's very interesting to me, at least, to see a lot of the big tech stocks. I think Apple, Google, Tesla are all down decently today, while Nvidia is still rotating higher. And it's making me think about, is there new leadership in the market developing before our eyes that is going to continue to play out over the next year? Let me get you a link to George's newsletter for those of you that haven't read it yet. It is a paid letter, but I would highly recommend it. He goes through an in-depth breakdown of everything that he is seeing, why he's making certain moves. And this week's letter kind of dove into that whole, here's the link, kind of dove into that whole segment. What's up, Wolf? Oh, you read it, Joseph? Yeah. It's really, really informative. Here's the link to it for everybody watching on YouTube. If you want to sign up, it's great information on there. It's talking about, is AI overhyped? Are we in a bubble? We kind of talked about that topic last week a little bit as well. It doesn't seem like George believes that is the actual case. It's kind of like the beginning of a whole new technology wave that he sees coming, but not a bubble. But we'll let him talk about that more. And we have an insane Nvidia stat to share where their market cap is just ballooning. I mean, it grew faster than anybody has in history. So we'll get into that. Wolf, glad to see you're doing good. I'm good on this Monday morning. We will be live in person on Wednesday, so that's an exciting thing for happening this week. But I'm good. Joseph commented, industry-related companies will definitely get a lift from AI. Yeah, that's a thought I've had that I've been interested to see if it develops where companies that you don't even think would be AI are going to benefit from AI because they're going to be able to, it's sad, but cut a lot of workers and boost their margins and just become so much more efficient with the way they run their businesses, even though you wouldn't traditionally think of them as a technology or AI company. Last week we were talking about how the big tech, and actually I posted about it on our social medias. For the people that are here, if you don't follow us on Instagram, TikTok, you should do that as well. Sorry, I just shill all of our social media channels, but got to do what you got to do. But we were talking about how all of these big tech companies just become bigger and bigger, and they're kind of like monopolies, and the government doesn't seem to be regulating them like that. But Apple was just hit with a massive fine by the EU over some of their rules and practices around music streaming. So we'll get into that story and how it affects Apple and maybe a new way of regulating these giant companies going forward. It seems like the EU seems to be stricter than America when it comes to that sort of things. But Apple stock was down today decently off this news, down 2.7% right now. So we'll talk more about that. Do you think we get a lot of companies put AI to their names just to pump in price? I think certain companies will do that. I know we saw a company, SoundHound AI, being pumped on social media last week, probably just because they had AI in their name. Like George said, they were an unremarkable company otherwise. So I don't know if like bigger companies will do that. Like, you know how Facebook changed its name to Meta when the metaverse was popular. That was a pretty weird one to me. I think you could see a lot of smaller companies doing that, and stocks that are like penny stocks and whatever, just trying to getting any kind of attention that they can. But I would doubt that like any big respectable, you know, company would do that. Um, here's a story about one of the favorites of the Prospero signals. SMCI had some big news about how it's going to be joining the S&P 500, and it was up a lot today. I think it broke $1,000. So we're also going to talk about some of the other stocks that are changing in the S&P 500 shuffle. The maker of Uggs is also going to be joining the S&P 500. Their name is Decker's Outdoor, and we'll look at them in the Prospero signals. Got some comments. The Economist had a recent article on Apple and how Apple is usually late to the game, but revolutionary when they do get it. Yeah, I think Apple's so big they don't need to be a first mover anymore, right? They just have to make sure that whatever product or service that they do have using the technology is great. So I think you're right, how they should and do take their time now and make sure they have a product that they think is the best on the market. Um, because if someone beats them to the punch, they're Apple, right? They already have all the users. George is joining us. Let's welcome George to the stage. Hello,
Hello.
George.
Sorry I'm a little late, everyone. It has been a very interesting morning. Uh, as I always kind of do, I made a lot of if the market is there, I'll make a lot of trades, and I did. So we have some interesting things to talk about. I do just have a few things to finish up in terms of sending the stream out to some people. Um, but after that, we are going to dive in and do all the fun stuff.
Yeah, and
You
I'll keep.
updated them on all the topics, Stephen?
I got a few more to get to, so I'll keep running through as you're growing the
Great.
stream through our socials. And we also got a comment from Wolf Long Island Blockchain T. I don't remember seeing that. When was that a stock? What was that back in
I
the
remember
the
that.
last crypto hype cycle? Wait for others to invent, then they buy them. Yeah, like I said before, in our Apple story and the monopoly stuff, I don't know if Apple will be able to, keep buying companies and acquiring companies, but we'll see. We'll get into all that about Apple. We have an updated offer from Macy's, who we covered this story at the end of last year, got an offer for $21 per share. Um, and they declined it basically instantly. But the company has just offered an updated price, and we'll talk about what that means for Macy's and maybe why this company is even attracted in Macy's. Because as we've talked about a lot on the stream, those businesses are kind of old, outdated, not necessarily something that you would think as being attractive. Um, but they continue to get offers. So we'll look at Macy's and maybe why the other company, their name was Arc House Brigade, why they're interested in Macy's at all. And then to end the stream, before we get into our model portfolio update, there's a lot of Tesla topics going on, and Tesla is kind of getting slammed a bit today, down over 5.5% right now. They reported some numbers about their EV sales in China for February, which were the lowest since the end of 2022 and down 19% year over year for the month of February. Not really good signs by any means. And Tesla is one of those companies where their China business is like super important. Companies that come to mind, Apple, Starbucks, Tesla, seem like their China businesses are weigh heavily on the stocks for sure. But then also, how we love to cover the ongoings of AI. Elon Musk is now suing OpenAI for the way they decided to, spin from being a nonprofit to for profit, basically. But we'll talk about that. And yeah,
I
any
think we're ready to dive in, right?
you ready? Yeah. So I think I would really like to start today with a look at the market and how you're feeling about the market today. I saw some threads coming through about how you might be adding some shorts, or you did add some shorts this morning.
I did,
So
yeah.
yeah, so maybe, and we see all these tech stocks, the biggest ones in the world, Apple, Tesla, Google, all down today. So is it a bearish opening to the week?
Yeah, definitely. I mean, we do see good strength in that option sentiment on QQQ and SPY, although we did see a little bit of a downturn, especially on SPY. But the way that I'm looking at this right now, I've traditionally started off my weeks pretty even long short. But this week I actually had 6 long and 3 short. I mean, we had a long index, but a long index isn't really the same as a long because there's comparative exposure, and the index we did was obviously precious metals. That's actually down a bit today, but we had a lot of room with that. We'll continue to monitor that one in the in terms of the market. But we were actually in our model portfolio, we stayed pretty even long short. We just got a little more aggressive long because we thought that as we'll talk about, things like SMCI would carry tech up, so we stayed pretty heavy long tech. But we reevaluated that a little bit. Like I would say, like all we did is instead of taking a more aggressive bull position, we added a new short LPL. We closed out Meta for reasons that we'll talk about a little more later. But yeah, I would say like we're definitely seeing a little more reason to be cautious on the both SPY and QQQ side. I would say more on the SPY than QQQ side, as we'll talk about a little later in terms of how we look at AI right now. And obviously our letter was really about that. But yeah, I would say that it's become very important for us as we start the week, always these days, to be kind of equal long short, because the market is so volatile, and that gives us kind of position to strike one way or the other. And actually it was a little different for us this week. We started out a little more long because of a lot of enthusiasm, anticipated tech enthusiasm, but we paired that back to more even long short. And we can check live now because we might look at some live updates. We've got some I'm looking to see if we cross over 400% above the S&P 500 again, because we've had some really good picks to start this week. No, we're at 355, which is about when we sent this out. So yeah, we're looking at 1, 2, 3, 4, 5 longs and 4 shorts right now. And if you include our index long on REMX, that's the strategic precious metals. That makes it 6. But as we said, we don't really look at that as a traditional long because it's very different to have exposure to an index versus a stock, right? Especially like an index of raw materials. You're not taking on the same risk as you do, say, versus the S&P 500 for an index long. And remember, since we benchmark everything against the S&P 500, taking a quote unquote long position that is an index, you're not really getting the same amount of risk as you take a stock. So I don't necessarily look at that as a traditional long, certainly not from a portfolio construction standpoint, because of kind of the risk mitigation embedded in kind of a diversified ETF, even within one sector. So I'd say it's somewhere between a traditional long and just a neutral position. So yeah, we're 5 long, 4 short, even though we started out 6-3. So we are navigating a little bit, but still, obviously a little net bullish. And we're a little net bullish in light of one of the other things that we talked about in the newsletter, that it's just been such a positive run. We haven't had kind of the normal February hangover that we have after the January runs. And that's kind of just like traditional, month to month market behavior, what we see. So we're seeing a very bullish market. And what I like to say about a bullish market is like, you're going to do worse betting against a bullish market staying bullish than you are trying to time that bear run, almost always, unless you are a very experienced investor, which most of you are not. Most of you do not have the experience levels to time a good bear shift in a bull market, which is why we just kind of give blanket recommendations like be mindful of the bull market, and be mindful of the bull market in the sense that, like what I said, right? I'm a little more bullish than bearish, even though I am seeing some bearish price movement in the market today. And I have moved a little more bearish, going from 6 longs and 3 shorts to 5 longs and 4 shorts. But it's just that. It's me being a little more cautious given the price action, not flipping bearish. Did you follow all that, Stephen?
Yes, and from your newsletter yesterday, where you said the title was "AI Bubble, Fad, or Seismic Shift," and I think that's an interesting conversation we could have today because you see the AI related stocks, Nvidia and SMCI, ripping higher today, but you're also seeing the tech giants rotate down, which is um, kind of, it seems like a new development for me, especially with Nvidia's case, because you seem to always see the Magnificent Seven tend to move together for the most part. Um, so are we seeing a rotation to where AI is kind of separating itself and going to be a leader over the older tech stocks, or is something else going on? Apple and Tesla have their own stories that we're going to get into later today. But it's definitely interesting to me to see that dynamic. So, could you explain maybe how you see that situation playing out?
Yeah, I actually quickly kind of, when we talked about this, I quickly corrected you on this one, Stephen, because I think a lot of people kind of get this wrong when they look at it, where it's just like, um, where they're just like, well, just like AI exuberance. But yeah, some of it is AI exuberance in terms of why like SMCI and Nvidia is going up. But other is it just like even like places like Micron that are like smaller players in this space are upping their actual earnings forecasts or their revenue forecast. So it's just like, I think that is a very interesting part of this that I think maybe not enough people really take in well enough, that it's just like there are these legitimate revenue profit forecasts going up for these businesses. So it's not like some fad, right? The fads are when things get overpriced, right? And as we said in our letter, like back in the tech bubble, the QQQ forward PE was over 200. And today, like, it's going to be a little higher, but before market open, Nvidia was 66 and SMCI was 41. So we're not even close to those levels. It's very much tied to these prices going up are very much tied to increased earnings. So that's a big difference that I think a lot of people don't understand. So it's just like, well, what's the problem with like Google and Meta? Well, it's what we talked about, right? We're seeing like Nvidia just like go up, 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 SMCI go up, up, up in terms of the demand for their products. But on the other end, places like that are very ad driven, like and Meta and Google, for example, like as good as those businesses are, especially Meta in terms of how it's growing and like they're making a lot of good decisions, they're doing dividends. There's a lot of good reasons to own Meta stock. There's also this worry on the other side. We talk about like consumer discretionary stocks being a worry, right? Because of how high, debt reached, personal debt, credit card debt reached a new all-time high. It continues to, right? So there's legitimate worries about how that will impact spending down the line. And we don't see the same increase in revenue, earnings, blah, 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 in, the ad business that we're seeing in the chip business, not even anything close. So there's very tangible reasons why we're seeing, Nvidia, SMCI go up, up, up. While the rest of the Magnificent Seven, Lam Research is another one we own, go up, 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 while the other ones aren't necessarily matching. And I think that that's like just a really important part. And it's just not the same. And there are legitimate concerns. We do love Meta still. We backed off. Obviously, that was what we took out of our portfolio, not because we don't love Meta, just we're a little cautious in how these ad businesses might see corrections if like we see more, manifestation of these worries, which is like the only reason the market would be going bearish right now is people are more and more worried about consumer spending, inflation, macro data, how that's going to eventually increase, that debt is going to eventually increase, like impact spending. And then when spending is impact, then people spend less on ads, right? So that's a very straight line. I know macro can be very complicated, but we're making that line very straight for you and easy to understand. And then in terms of the question, I said, who are these people that are saying SMCI is a bubble? This is why you don't just go people. This is why you should read straight up sources, because I'd like to know what sources are saying SMCI is in a bubble, because that's just straight up garbage, considering it hasn't even been added to the S&P 500 yet. There's going to be an like that was just the announcement. I think it said something like March 8th or 14th or something like that. We can get the exact date if someone actually wants to look at it. I'm looking at the exact date, right?
March 18th.
March 18th, right? So the real question is, why the hell would you sell before it got added to that? Like, do I guarantee it's going to go up? Do I guarantee it's going to like have a bear run? No, I have no idea. But what happens on the 18th, this is just going up in anticipation of that. What happens on the 18th is every fund that owns SPY is going to, in essence, be buying SMCI on March 18th. Anything that's embedded in that, Vanguard Total Return, anything that tracks the S&P 500, anything that you can think of. Vanguard probably owns it, but they'll probably up their allocation based on, this move up and this move up in market cap, et cetera. It's a complicated allocation. But yes, March 18th is when we know a bunch of places are going to buy this stock. So why would you listen to anyone that tells you that stock is in a bubble when we know that everybody and their mother is going to be buying the stock on March 18th? It doesn't mean that it's going to go up for sure from here. It doesn't mean that. It's up 25% in anticipation of all those buys right now. So it doesn't mean that it's going to go up, but it certainly means anyone that's talking about SMCI being in a bubble is an idiot. They don't know what they're talking about. They don't know what the bubble is. They don't know how to properly value a company in this incredibly large growing industry that's about to get added to the S&P 500. And I'll give you one more piece of data, right? NVIDIA was for a while an 87 profitability, 82 growth in our system. Since the new numbers have been updated, NVIDIA is now a 90 profitability and it's down to a 72 growth. Now, when you look at SMCI, that's actually moved into the number one profitability plus growth. It's a 90 profitability and a 77 growth. So all of a sudden, you have SMCI at, I believe, like a 75, 76 upside, and then a higher profitability and growth than NVIDIA. So to me, that tells the story of a stock that is undervalued, at least relative to NVIDIA, relative to the profitability and the growth. And we just talked about it. It's got a lower PE than NVIDIA, about a 50% discount on the PE for NVIDIA to SMCI. So again, like if anything's overvalued, anything's in a bubble, it's NVIDIA. It isn't SMCI. SMCI is a bar none, no debate value compared to NVIDIA. So if you own both, if you're thinking about owning both, if you're wondering which one is in the bubble, it's NVIDIA and not SMCI. And I'm not even saying either are in a bubble, but I'm definitely saying anyone that's telling you that doesn't know what the hell they're talking about. There's no bubble before something gets added to the S&P 500. Those people are not smart, or they're motivated to get it at a lower price. It's one of the two.
So you obviously talked about how they're going to be added to the S&P 500. There's another stock that I wanted to bring up with that news that was announced today. It was Deckers Outdoor, which is the maker of Hoka sneakers and Uggs. They're both going to be replacing Whirlpool and Zions Bancorp March 18th, like we said. So I think we've talked about this before. I forget which other stock was added when we were talking about it. But if you want to refresh the people on your view, like of how bullish it is when a company is added to one of these major indexes, and then versus these other companies like Whirlpool and Zions being removed, like the whole situation with these companies with that announcement.
Yeah, I mean, not all of this stuff is in a vacuum, right? Like I think we're talking about like a good reason to be generally bullish, right? Whether it's DEC or SMCI, and then generally bearish on the other things. But like we're saying, there's two components, right? There's a news event and then there's value, right? And I think some people don't do both analyses sometimes, right? Just because these stocks are getting added to the S&P 500 doesn't mean they can go up infinite amounts it just means that it's a good news event and there will be a boost to their value. But especially when you see a stock go up 25% in a day, like SMCI is right now, like there are questions, there are legitimate questions to whether it's valued correctly, right? And that's the same thing for these down ones. Like I'm sure these other ones are going down. Like we could take a look at Zion or whatever. I'm sure if you take a look at those two, Zion is up actually today. What's the other one that's getting removed? Whirlpool's up a little.
Whirlpool.
So yeah, you can see like these aren't black and white things, right? But it's if we teach one thing, it's like it's about the total picture, right? And the bottom line is if you look at deck, there's more downside than upside to it. It's got a pretty high net option sentiment at 77, so it's not a bad investment. I wouldn't call it a particularly good one either. I think Zion's is typically pretty bad in Prospero. I'll take a look at that. I know Whirlpool was coming up as a short a lot. So might have been people betting against this event. Yeah, Zion is 40 downside, 60, 40 upside, 60 downside, pretty low net option sentiment, but not too low for a bank stock, to be honest, at 43. Then let's take a look at Pool. Yeah, Whirlpool's a 90 upside, a 19 upside and 77 downside. Pretty low net option sentiment. Yeah, we've been shorting this a lot lately. I don't know if we have a short on right now, but it certainly has been low, and that's not a big mystery why. So yeah, I think that should answer the question. You can ask me the next one while I grab a LaCroix. I'm pretty hot back here, but I'm listening.
Yeah. So the follow up to your statements right there, I wanted to say is, would it be fair for me to say that so an announcement of a company being added to the S&P 500, it kind of raises their floor more so than it raises their ceiling. So it gives them a base level of support of index buying that's going to be occurring. So it kind of affects their floor more than their ceiling. Would that be fair to say?
No, I think it raises both. What's going on here? I think are
Yeah,
we
you got a little
losing
blurry.
focus a little? Yeah, I think we all right, I have to do I'm gonna have to do one thing. I think because it's sunnier. Hold on. Let's see if I'm a good enough expert in this yet. All right, so we gotta go to 100 light, gotta go to this level, and then
Look at that city skyline, people. New York City.
and then sorry, it's trying to get focus. And then this works sometimes. Sorry, I'm trying to become an AV expert all at once. Oop, is this gonna work?
Yep, it
Yep.
worked.
There we go. Look at me go.
All right, so before we get into this Apple topic, the last thing I want to say about kind of our opening segments, Nvidia's market cap went from 1 to 2 trillion in 180 trading days, so just over a half a year in actual time. If I had told you they were going to be 2 trillion back when they were 1 trillion, less than a year ago, it probably would have been surprising. Could you make a prediction on if you think they're going to reach 3 trillion within the next year?
Should we talk about this within the we've talked about the other story. I forgot, are we doing chips again today, or was that just a previous topic? Well, I
No,
can talk about it.
yeah.
I think like the big thing as we talk about this is like I would say if there's not any issues with China, which there could be, obviously we have these like chip cold wars, and we're seeing with like Tesla, like what happens if like anything, if demand for in China gets curbed, right? Which very well could happen. This is not unrealistic, especially like Trump has had some pretty unfriendly China policies compared to the Democrats. Like whether or not that's good or bad is there's fair debates on that. I actually personally think I kind of go both ways. Like, I actually personally think some of his China policies are a lot better than a lot of the other policies. If there's one thing that I actually liked about him as a president, I would say that is a big thing to point to. I would say that we got a little too friendly in globalization towards them, and we let a little too much of our manufacturing leave, and we gave them a little too much power, especially as it relates to that and racking up more debt, which of course both the Democrats and the Republicans do. Like, they rack up way too much debt, makes us China is basically one of the main people buying that debt. So that's not a wise strategy that either of the political parties are doing. But at least Trump, started to do more to think about that trade imbalance, and I think I've seen other administrations do, or I should just say his administration, not him personally. I don't really know how he feels about China policy, but I would say that, like, that's a big issue for Nvidia. We have, like, Meta, Google, making their own, Amazon making their own, potential high performance chips. And, like, I actually see some people talking to me on the internet about this stuff. We're just like, yeah, it'll be a long time before things compete. It's just like, yeah, but you never know. Like, in quantum computers, like, people have, like, correcting me on that. It's like, well, it's gonna be a long time. It's like, yeah, I know it's gonna be a long time. But, like, what some of you people don't know is that things move on announcements. If any significant progress is made, or any announcement, or, like, it's even just in a conference call, like one of these big cloud providers announces that they've made some progress on, some tangible progress on quantum computing or these chips or whatever. Quantum computing is, of course, less likely, but it isn't a non-factor, right? Which I think some people don't understand when I talk about these things. Like, it is a factor. These announcements can be a factor, and it's good to know about the risk profiles of them. And it could just be announcements. It could just be like, hey, Meta is making some progress on making their own chips, and it can send Nvidia stock down. And I think that's what a lot of people don't understand. So there's two clear cases. There's the case where there's no real worries about China, or there's no real demand impact for Nvidia chips, or no tangible one, then, or it doesn't really, like, growth elsewhere is so big that it doesn't make a difference, right? There's no good progress made by the chip providers. I mean, sorry, by the cloud provider, the big cloud providers on their own chips. If those things happen, that could easily be the case, 2 to 3 billion in the next year. But the risk factors are there, and anyone that doesn't want to look at them, because you just prefer to look at the bull case, or you're an Nvidia stockholder, or whatever number of things that cause people to, like, just run their mouths on the internet to someone like me that actually understands this stuff way better than you do. Sorry, it's just the truth. Then, yeah, like, I think you don't necessarily know how much even just news can impact prices on these things sometimes. Stock prices.
I mean, we're definitely seeing that with the SMCI today. But going away from AI now for a bit, we were talking last week a lot about, one of your go-to lines when we're talking about the monopolies is how Google has been the clearest monopoly for a long time now. But Apple's pretty close if they're not Google. But they finally got hit, or not finally, but they got hit with a EU antitrust fine, almost $2 billion, just under, for their streaming practices. And there's some interesting things being said about this because, it's in the EU and Spotify is the biggest competitor, and they're based in Sweden. And Apple actually directly called out Spotify in their response to this fine. And Apple stock is down today. So is this fine concerning to you? Could you see it leading to more? And how do you think this situation plays out between Apple and the EU?
Well, it's kind of funny when I hear people talk about this kind of stuff, because they act like, I think there's a few fundamental things that people get wrong when they talk about this Apple story, or they talk about business, or in business in general. Like, like, there's no international rules, certainly, that a free market exists. Like, Sweden doesn't owe us, like, an untampered market, a free market. They don't owe, like, Sweden, the EU, whatever. Nobody has said, like, we sign up to letting Apple, like, freely operate in our country and, like, gouge Spotify, like, and gouge everybody. Like, nobody's owed that. There's no international treaties, there's no laws, and people talk about that as if like there's an obligation to capitalism and a free market. And what's really funny about that is it's like it doesn't even exist in America. Like America still has oil subsidies, right? Some states even more than others. Like that's not a free market. Like a lot more, and I'm not saying that there should be any of this or whatever, but I'm just saying America doesn't have a free market, right? So even then, why are people expecting, people talk about it all the time like there's a free market here, but there actually isn't a free market. So why then do people act so surprised when like there isn't even a free market or anything? It's like we put tariffs on things. It's the same thing, just in reverse of like Sweden or the EU or whatever. They could be like, we don't owe you our data just because people own iPhones. We don't owe you certain pricing. We don't owe you certain access. And that's all the EU is saying here. That like I'm actually surprised, and I've talked about this before in terms of the Apple strategy. Like Apple takes, I think, 33% of like iTunes sales or like whatever. And they the reason that they do that is very clearly that their revenue is like not doing well and they need to like hold their ground on it. But like I've actually never seen a situation where a company starts getting some heat, especially from governments, about their pricing, and their official response seems to be like, "Fuck off." Like, what are you going to do about it? That seems to be Apple's like official response, even though they're not saying it that way. Like, if Apple didn't want to see these fines, they could say like, "Oh, maybe we're open to moving it down to 25%, 20, if you want to work with a counterparty, whether it's a government, anyone, like a partnership deal, whatever, like you've got to be open to moving. You got to be open to compromising. You got to be open to whatever. And if you don't, you can't be surprised when you get like slapped with fines. These governments don't owe Apple anything. And if Apple's just going to be like, fuck you, like we don't care how you think, what you think about pricings, they and you as an Apple shareholder shouldn't be surprised when the governments are just like, we can hit back. Like that's well within their rights. And like Apple should take this as a huge warning that like not like an, oh, we're Apple, we can do whatever they want. They should actually, and they might have to start taking this seriously. The problem is they know if they give ground on in the EU, they'll probably have to give ground everywhere, and they're just like holding very strong. But like in my experience, especially what I'm seeing with the EU more and more, is like if they dig in, it's not going to be good for them. You don't like as a private corporation, you don't do very well like battling governments. Now, if the US wanted to get involved, which I'm not sure they do, and they started to want to find like Spotify for like finding like being an agent that finds Apple, and like much like the EU, they don't have to be like, they could do it. They can't like just find Spotify for being Spotify, but they could find Spotify, say, for not sharing enough with American artists and being like monopolistic on their end. And there could be like kind of like a trade war that goes on there. Like this is what happens when governments start overreaching in business, because there's absolutely nothing stopping the DOJ from bringing a case against Spotify, or just like grabbing someone like that. Like all the time, this happens in America. They'll just grab someone that wants to be, that is like a good plaintiff. That is just like, hey, like my business, like, they'll grab some recording artist and like have them sue Spotify in an American court, in a friendly court, to, their business. California tends to have pretty like good laws for like individual recording artists. I wouldn't be surprised to see it come through there, whatever. Texas is good for some things. It really depends. I don't actually know the individual laws that well, but I wouldn't be surprised to see it come through California. But the bottom line is, I don't know if the US government would get involved there, but you never know. If someone brings a case, they might be forced to get involved. But the US government doesn't tend, like, unless it's a matter of national security, which I do believe they think this China chips thing is whatever. America doesn't tend to get all that involved in things anymore. They used to. They used to be much more heavy-handed with tariffs. Um, but I would say part of that, and part of like what I was commenting in terms of like the different like political regimes and their attitude towards China. I think part of it is some people treat China as like such a big holder of our debt and such a big manufacturer of our goods that they don't really want to mess with them. And that ship has kind of sailed. But we're kind of doing things here and there because it has, especially when it comes to chips and their AI and how much they penetrate our systems, has become a matter of national security. But I differentiate there because we're just like, well, they're getting involved with China. It's like, yeah, they're getting involved in chips for national security matter. It doesn't mean they're going to get involved in a pissing contest with like Spotify and Apple or whatever, especially considering like our government has been pretty hands off with Apple on this one. But I think that's just because they don't want to take on Apple. But I don't think they love what Apple's doing either, which is why I don't see them coming to the defense. I don't see them taking on Spotify. But I'm kind of giving you an example of legally how these things play out sometimes on kind of like an international scale. And it's just like, I think the big thing for people to take away, if you want to sound informed on these kind of topics, is just remember that the free market doesn't actually exist. It is kind of a lie that people tell you exists, but it doesn't really exist. It hasn't existed. I'm not sure it ever existed in America. One could make the argument. But even when you look at something like the way we deal with trust and trust busting in the Gilded Age, right? That wasn't the free market, right? We get in all the time with monopolies, blah, blah, blah. And you could say that like those are interfering with the free market when people get that monopolistic or people get too much vertical or horizontal integration in their businesses. But again, that's not a free market. We don't have a free market. People talking about our economy as if it's a free market don't know what they're talking about.
And when you make that point, do you necessarily think that like if it was a true free market, it would be better, or would it just be like different problems? That like is a true free market actually the best case scenario?
No, and I just gave you that reason. If it was a true free market, then like I don't think we even have a political system anymore. We just have oligarchs, right? US Steel, like JP Morgan, like the robber barons as they were called in history. Like if we didn't break up those trusts that Teddy Roosevelt didn't trust bust as he called it, like and it got called, the progressives. It was a very interesting time in history. For those that think we might never get out of this corruption, it was more corrupt back then, and like all it took was one good president to get us out of it. But like, no, of course you can't have a free market. Like when you have a free market in this situation, like seriously, like US, the Carnegies and the Pierpont Morgan family, like they would be like our kings right now. And like more and more, like, they would just like control, like the government would probably be like, weak compared to them. And that's all that happened. They got a little too strong and the government hit them back, which we can do around these companies right now. But there's just no evidence that we want to do that, which is why the government like always looks like relatively weaker compared to like a lot of these, places, because it has gotten, pretty out of hand in terms of like how little regulation and like, regulation, especially around monopolies, tends to happen, which makes these companies like more and more powerful. But yeah, I don't think a free market works. But on the other hand, what also doesn't really work is selective application of these laws, right? Like it doesn't make sense when you're talking about, oil subsidies to be like, yeah, we're going to subsidize these companies that are basically like destroying the planet just because we want to. But when it comes to making our healthcare system, more efficient, and just to be clear, like when anybody talks about like single payer health, like costing the country more, there's absolutely no evidence of that. Every budget, like every time this is looked at by the budgetary committee and whatever, it's talked about differently politically, but everything about single payer health, every study says that it will save this country money, right? So when you look at something like that, where more people get health care and it lowers the overall cost to the economy. And that's not getting done for like reasons of the free market, but we're still subsidizing oil like because we want to. That's where it gets a little dicey when just like, oh, it seems like you only want to talk about this as a free market. You only want to say like that's socialism when you don't like what is happening. But like, why isn't it socialism when we hand oil companies profits and like places like Exxon are having their products subsidized when they post record profits? Why is that happening? That's not a free market. That's our tax dollars being handed to ExxonMobil so they can have higher profits while we struggle in this healthcare system. That's an important contrast that I think not enough people look at. And I say struggle when I say we see people having to post GoFundMe's so their relatives can get medical care, right? That's a broken system when oil companies are getting subsidized and we have people's fortunes and lives destroyed because we can't have the same single payer health system that every other civilized Western nation has.
Yep, yep. A lot of complex problems there. Spinning to a much less grandiose topic, zooming in on a single company, Macy's. We highlighted them. I believe the end of last year was the first time we heard news of them possibly getting a buyout offer, which they almost instantly declined. It was for $21 a share back then. But there's been news, it's been updated to $24 per share, which was a $6.6 billion offer. And it's interesting, when I told you this story, this updated story before we got on the stream, you were like, well, maybe who is Arc House Brigade? They're the people that made the offer. Maybe they have another interest. So I looked them up before we got to this point, and it's interesting because they're a real estate focused investing firm. So I think that kind of may, because I remember you were mentioning real estate, so
That's the
maybe
first
that
thing I said.
answers.
Yeah.
Yeah.
I was like, they could just really want Macy's real estate. They could like they've got some valuable real estate, especially in New York. Like, even if you just like look at that building that they own, right? You could just shut down Macy's and create luxury condos in that building, in a historic Macy's building. Like, how much would that be worth? Like, that would be an interesting analysis to do, just to like look at that square footage and see like what that could be worth in condos. And we should do that next week. I think that would be super interesting to show people like how to do like a value side to that. And that's not the only real estate they own, but we should do a little research project on that because I think it would be fun. Because I was like, yeah, their business is dying and losing money, but like, and people like talk about this all the time. It's like, well, you're just gonna like strip down the business, right? Like lay people off. It's like, yeah, like sometimes like businesses that are just drowning, like it's not a bad idea to like do that and create new jobs for viable businesses, right? Like create more like housing available. Like I know that New York doesn't particularly need housing, but it's also like super overpriced. That's like not the best humanitarian aspect, but it's like no, you're not necessarily doing great things for the economy by keeping like a zombie business afloat, right? That isn't profitable, that is going to have to keep laying people off and just go into a death spiral down. Like, I'm not even going to get to the moral side of it, but I don't think there's some inherent moral strength in keeping businesses alive that aren't viable businesses, right? I think that's thing one. Thing two is we obviously talked about the real estate, but I was like, yeah, I mean, between the value of the real estate, and then also just like the value of like the Macy's mailing list and all of their like retail data and like, just like little things like that. Like data is king, right? They could keep like some Macy's alive, like they could grab some of the real estate and they could keep like, sending out like, you know, little purchases, right? They could sell like, they could that company could sell like the Macy's mailing list to like and data analysis to like Temu. Temu is like a business that we talk about sometimes, right? What if they just like sold that whole cloth? Like I'm sure you could get maybe like at least $1 billion for that data. And maybe like the infrastructure in terms of like the shipping infrastructure that Macy's uses. maybe even more for that, especially if you're talking about a company like even Mercado Libre that might want more shipping lanes into the US. These are just ideas, but like I think what people don't understand when they look at a business, it's like, yeah, like why would you offer more than it's trading at now? Like why would that announcement be made? And like Macy's doesn't necessarily trade up to the offer because the offer is for a different business, right? The offer, like just say in this example, it looks like there's at least some real estate play to it. So the offer is valuing their assets around a real estate and maybe a data play, which is a different way to value the assets than they're being used right now to run the Macy's business, right? And that's basically, we're seeing the market say that, right? We're seeing the market say that, like, I like their business less than the buyout offer, right? And the only reason that basically happens is if the market's saying, like, well, we don't actually know if Macy's is going to sell. And if they don't sell, this is what I think their business is worth. Even if they officially sell and the stock's going to go up, basically the stock being at these levels is a reflection of just how little these people like the business.
Yeah, and we didn't get a clear answer from Macy's, so maybe by next stream we'll have their decision one way or the other, and we'll update people. But our final topic of the day has to do with Tesla, which is kind of getting slammed right now, down over 6.5% today. They reported very disappointing numbers for their China EV sales for February. It was their lowest number since December of 2022, and it was down 19% year over year for the month. Um, I've been increasingly seeing more and more bearish news stories about the EV space come out, not necessarily regarding Tesla. Like there's been bad news about Mercedes, Apple canceled their EV project. You know, these bad companies like growth companies that are been overvalued in the past, Rivian, Lucid, just not good news. How do you feel about the EV space in Tesla?
Well, I mean, it's hard to ignore those numbers, right? And like everybody, the China EV market is huge, and Tesla was like grabbing a lot of it, but it's hard to forecast them continuing to do that, you know? Like, I think that that's like a major problem that we're facing, that we're looking at. It's just like, yeah, I think that it's like very, very difficult to look at like EVs and to like say to ourselves like, yeah, we have confidence that Apple's going to keep being the leader, blah blah blah, any of that stuff, right? So I think that, or sorry, that Tesla is going to keep being like the leader, like, and I think broadly you look at these other companies having trouble, whether it be like Rivian or whatever, like, yeah, like, well, I think you were going to tell me, like, I think what are the Chinese ones? It's like Didi is one of them. um
I think Neo is one of the bigger ones, and then there's one called I think it's called G or XI Auto. But
oh yeah.
that was one of the questions I was going to spin to. The competition of EVs within China itself too, also putting pressure on Tesla.
Yeah, no, I mean, I think China has such a manufacturing advantage, right? Because of like questionable labor practices. So like if you're a company like, forget about like America, right? Like look at Germany. That just like has like much like, I would say better labor practices than even like America. Like it gets hard to look at a business like that and compete like with a Chinese automaker. Like especially like because not only when you look at China do you look at cheap labor, you're also looking at a company like at a country that has invested heavily in tech, heavily in manufacturing, like has like better laws in terms of things like pollution. Like Germany has much more strict laws in terms of like renewables and things like, so you're just dealing with like completely different regulatory situations that are much more friendly to manufacturing in China. So it's just like it's very hard for a company, I'm sure, like Mercedes or any company to really compete. And then you get into like the legacy costs in America, whether it be like GM or whatever. It's very hard to envision competing with these companies, and it's like very scary, especially for Tesla. Like we're not even anticipating because I do think the U.S. will probably tariff things, and that's what they traditionally do with like things like that are very hard to compete with. Like even like Japanese and German cars are pretty heavily tariffed to make it easier for American cars, right? So I think we're definitely looking at Yeah, another example of like the free market not existing. But that in that example, protecting American companies, which is not bad, by the way. I don't think that's a bad thing. But I would say like one of the things that I look at is that yeah, it's just very hard for these other places to compete, and especially if you're like forecasting growth for Tesla going into China, it definitely looks like that's going to be a problem. And it definitely looks like, I mean, it already is a problem. It's definitely going to be a problem on an ongoing basis for how the company is valued. Um, but yeah, it definitely becomes harder and harder to look at these places and forecast them up for sure.
Yeah, and I guess we're seeing that with the Tesla stock price today. And the last piece of news we have on Tesla and Elon is that Elon actually opened up a lawsuit against OpenAI over the way they changed their business from being a nonprofit to a for-profit company. Um, what do you think of that situation? Do you think there's any ulterior motive where he just wants to slow down the progress of OpenAI tech, or do you think that's actually a legitimate like business um, concern he has with that lawsuit?
I mean, I think it's just a way, like, I think it's like a desperate stab to like, I think help Tesla stock go up, right? He wants people to be like, oh, maybe OpenAI will take a hit and Tesla's AI will do better, like, or XAI. Like, I think that's probably like the Occam's razor, like the simplest answer there. But I also think Elon just is like, at this point, it's like kind of lashing out against anyone he doesn't like. I think it's like one of those things where and I don't think he likes OpenAI. He doesn't like that they're competing. He doesn't like, I think he always probably thought that he was going to just like win the AI game with his like everything company. XAI is a company that he's had a very long time, or X was an everything company. So I think he's thought he's going to win this game for a long time. And he's probably just like pissed off that like realistically, it doesn't look like he's going to win AI right now. Like as I've said with him, you can never really bet against him, but I feel less confident in him than I ever have, given just like his general like behavior and even some of the things that he's been saying just like publicly just aren't, they don't make rational sense. Now he could have some, as I always say with him, he could have some other angle that we're just not seeing yet in terms of how this is going to play out. But it's hard to like not look at some of the things he's doing as just like plain irrational without reason. You have to at least examine that as a possibility. And I would also say that that uh, when you look at some of this stuff and how he uses headlines, it would just not be a very big surprise to me that he's just like trying to get people to write stories that are just like, oh, like maybe oh, this is going to hit OpenAI and his AI company is going to do better. That to me is like the most obvious answer. But it could just, like I'm saying, be like bitterness. Like he might just be doing anything to slow down his AI competitors. And from that aspect, it's not a bad idea that his lawyers are probably telling them like, hey, it's just like a negative headline for them, and maybe he'll hit Microsoft's stock price or help Tesla's or whatever. But like B, like it's probably a non-zero chance that there's some fine that OpenAI has to pay or like whatever. And like I think you have to look at that. If you look at the legal game for these companies, it's just like, especially when you're looking at a competitor, like the chance that it could be a negative event for your AI competitor, like, and potentially a headline, that just makes sense for you to pursue those legal costs, right? It's only some, like, I think relatively small fee for him, and it's probably analysis that he's doing to just like lob the suit at them. And it might be a major headache for them to deal with. um, so I think that's probably how he's thinking about it.
Agreed. And he always says Tesla doesn't spend money on marketing, but this is kind of an expense that you're saying like could lead to some kind of, marketing type of articles being published. So interesting to see that pointed out. I think we're ready to spin to the model portfolio update and answer any questions we get in the chat. But you also wanted to do a new segment to end today, correct? That we'll also do?
Yep, we're gonna do it quickly. We're gonna do like, I made a lot of moves this morning, and I'm trying to like make more content for the investing letter. Um, so we're just gonna do like a little. I'll share my screen in a second so people can see what I'm writing. But we're just going to do a little, like, let's call it like a special update on the moves that I made this morning. And I'm going to start sharing my screen. And like for those that don't use mobile, I'm just going to like walk you through. And I don't know if it's exactly the same, but I'm just going to walk you through where I go in Substack. So it's just like here, and I go to like my chats. And so if you use on the computer, you should be able to see. So you can see, I just basically added an LPL short and I closed the Meta long this morning. And why did I do that? Now we're just going to do. You can see, right, Stephen? Any questions about what I'm doing here, guys? You can ask. But I'm just going to be obviously typing. I want to take a look. Do you want to tell me everything that's going on with QQQ and SPY net option sentiment?
Yes, I'll get that for you right now. Let's take a look at QQQ. It is currently at 50. And it was at 49 this morning, so not a lot of movement there, slightly higher. And if we go to the SPY, it is at, it's at 50 as well. Both are even right now.
Yeah, we've seen them cross a little bit back and forth. Okay. As we wanted to open up the day.
George, did you pay any attention to Dell stock? I remember you brought it up at the end of one of our streams last week. And we were like,
I haven't researched that yet. No, but like I don't even know but like yeah, I'll research it for Wednesday. I think that's a good topic. I did not do anything. I'm obviously writing this right now. And yeah, for those that I do know, Wolf just shared us. So we missed you kind of missed all of our early topics. Right now, what we're doing is we're updating. I mean, we've had a great newsletter performance today. We're like we closed the week up 283 on the market, but we're actually sitting at 361. And what's interesting for those that haven't like followed our portfolio that closely, what's interesting is like you might say, well, it's pretty early in the year, but one of the things we've done this year is we really changed our process. If you look in 2023, we actually only did for our newsletter picks, we actually only did 154 picks all year. And then we've already done 84 this year in the beginning of March. And we're 361 above. So you could say it's early in the year, but we're also through a few months, we're getting more aggressive with our picks. So this is a very representative sample. even though it's very early on. And we're just absolutely killing it this year. Like, as you can see, last year we did it. We were a little higher in our shorts than our longs, and we did more shorts than longs. And even this year, in a bull market, we're still a little more shorts than longs in terms of the number, but we're doing a very specific strategy. Like you can see, we're holding the longs a lot longer, 12 days on average, in these, shorter, because basically what we're doing is, like, especially for more risky times to begin the week, we're like going to neutral portfolio, like close to as many shorts as longs, to get us in a good position, because it's a very volatile market this year. So we kind of are doing these like wait and see approaches to start the week. And then, as we did last week, we started the week with 5 longs and 4 shorts, and we closed the week with 7 longs and 1 short. So that gives you a really good example of how we're taking our own advice and playing the market, how things get more and more short. But like, yes, what I'm doing right now is I'm actually updating on some moves I made this morning, where I'm basically like looking at the risk exposure and basically like how I would say, especially the index is performing. And, we're looking at QQQ. And for those that don't know, I'll share this. For those that are kind of newer, I'll share our learning. We have like a really great learning resources thing here, that will tell you like what I'm talking about with um, net option sentiment. Yeah, I'll do that in a second before I do my update and send this around. So when I say talk about QQQ and SPY net option sentiment, like, not only am I talking about what I'm seeing relatively to price, but for those again that are newer, maybe not be as familiar with what we're doing, every week we publish a fully free newsletter. This one won't be free, but this is a long one that we publish for free every Sunday, right? And we'll look at like these SPY and QQQ net option sentiment, and we'll tell you like what we would consider like bull and bear levels, like what our analysis is, like that. You can just look at. I'll actually just share in case you're not a newsletter subscriber yet. But most people that sign up for our app get the newsletter subscription. So I'm just going to post in case you want to follow us on that as well. But yeah, basically what I was looking at this morning is I didn't like the price momentum. It's hard to write lie.
I think something just happened with your camera. It went off, but we could still hear you and see your screen. So
Probably the old overheating. Yes. I am going to move back. I'm going to move to the other room where I do the model portfolio update. It'll be better in that. But why don't you take a shot? Why don't you, like, you have access to the model portfolio, right?
I do.
Why don't you take a shot at explaining to people um, the long short tracker? Well, I'll do that. I'll give you a start, and then you should just explain like generally what you know about why we enter and exit these trades. You should know enough. So you take over for me, and you just like go to the long tracker, and you can kind of see the key metrics and what we're looking at about long and short, and like why you think we'd exit or we enter and exit these trades. And I'll get set up to do the model portfolio update on my other setup. And I'll be
Okay.
back in like a minute or two.
Yep. So Jay, could you comment your question again? Because I think you might be referring to the newsletter, if I'm correct. And I want to know that we actually answer the thing you're questioning. Are you asking, like when George sends out the newsletter and you get the photos of his longs and shorts for the week, um, how you can tell which ones he's adding and dropping in those photos? Um, no, referring to the spreadsheet. So I know George just looks at certain uh, specific metrics
Wait,
for each
Steven, can you
stock.
hear me?
Yeah, I can hear you now.
Well, I just showed you the long tracker and short tracker. He's actually right. I showed you on my screen when I met.
I know.
Like,
I wasn't sure by his question what. I thought he may be referring to other things, so I just wanted to be
no,
sure.
I
But
showed
yeah,
you
he
on the
answered.
screen. Yeah, I showed you on the screen. It's this. Like, you can go to this. You should go to this, right? In 1 second, right? You see this? There's like a long tracker and a short tracker. You see this, right? You have access to the spreadsheet.
Yeah, I'm not going to explain this. I'm gonna wait for you to rejoin and explain this because I don't want to speak something wrong about. I mean, you decide what are all the moves. So
Well,
I'm
look,
just
look at it. Like, I want you to take your own shot, right? You don't have to know all of this, right? But look at it and explain like what you see in terms of the kinds of things that make me exit and enter and exit. I'll give you a hint. Like net option sentiment is super important. Like upside minus downside is super important. Just, I think it's important from your perspective, right? I'll give the answer, but like you should give your perspective on why we enter and exit these things. Like, I think that's important.
okay.
All right, I'll
I
be right back.
was yeah, gotcha. I was sorry, I got muted. I was gonna start talking about how there's certain signals that we refer to as our hero metrics, which we actually posted a short about them, but those are net option sentiment, upside breakout, downside breakout. George has said before how you want to see upside breakout being at least 20 to 30 uh, numbers positioned higher than downside breakout. So if you look at the short tracker, for example, Microsoft right now has an 84 upside breakout, 29 downside breakout. So that's an example of a stock that has a um, really good signals of that indicator. And then net option sentiment, obviously, it's a bell curve. So the higher, the better. Stocks like Nvidia and Meta have been at 100 or close to 100 for a long time now. In the long portfolio tab, for example, where are the exit dates? That I'm not sure. We'll have to have George answer that. I think the exit dates might be under. Oh. So if you scroll down, they're light blue, and it's the fourth column. It says exit, and if the stock is open, there'll be no date. But if we have exited position, there's like a light blue date that's filled in that column that shows you the date, and you can just scroll through the positions and see. Do you see those, Jay? The entry dates are also there, but they're in black. They're the first column. So they're not under the long tracker and short tracker. They're under a tab called long portfolio and short portfolio. They're in the same spreadsheet. Okay. But just to go back to the tracker, obviously the different columns and tabs are highlighted. So obviously the green would represent them being viewed as positively in our signals, and yellow being kind of neutral and red being bad. Um, you can look at some things like PayPal stock has been a dog for a while. Net option sentiment at 76 though. I see George is joining back in. Jay, just update us if you're looking at the right uh, tab for the sheet now. But we have George back also.
So what's the question?
He was trying to find the entry and exit dates, but I think he has to look at the long portfolio and short portfolio tabs, not the long tracker and short tracker tabs.
We're trying to get that. We're trying to get that all in one place right now. But yes, per your question, it's a little difficult because we have to VLOOKUP. And what's difficult is like these are three different SBGI positions, right? These are two different Xerox positions. and they have different dates, right? So we're actually figuring that out right now. We're setting something up. It's on my list of things to do. But if you want to, you got to just like look and you want to know the position, just do what I do, Control F, right? That's the same thing I do. And we'll see like um, if I think probably Xerox is a better example, like here, XRX, right? So we see one, we entered there, and then um, there's one that's been we're in a very long time, right? Back in 1.9 that we entered. So yeah, it depends. It's a little hard because there's multiple positions. And like we can't just even label them. We thought about it. We can't just label them like XRX1 and XRX2. Um, just uh because we it'll change like the ticker lookup when it looks up price, right? If this says XRX2. So we're doing workarounds, uh, but that's what we have to do for now. We're gonna figure out a better way. We're working on that.
We got another question from Blake. He's asking, the exit date isn't listed on the newsletter picks, but is listed on the model portfolio sheet. Are they different? Or
Well, I
they
don't
are
know what it
different?
is, but I don't know what you mean by that. The newsletter picks and model portfolio are different portfolios, so they're not going to have the same entry and exit things, right? So I don't really understand that question, to be honest. Um, like we can go in and look at like this, right? You can look at long. I mean, I don't really understand what you mean, but the latest date is exit. Um, just because it's a little different because especially like sometimes we're talking about like when the coverage ended, right? And the coverage ends like for this, right? The last date, this is a good example. Like the last date for um well, this is going to be different. For EXP, right, was 3-1 because we didn't keep holding the position. The latest date was 3-1. We like got out. This is the complications of like getting out over the weekend, right? We're not going to do the open price because we didn't hold it through open, right? Even though that would have been beneficial to us, as you can see. Like we didn't hold it through open, so we have to do the exit price, right? Or we have to do the latest date, 3-1, and the latest price, this. So it's different. The model portfolio will always have direct entries and exits because we don't update it over the weekend. Since the newsletter picks have a latest date, that's why it's different, but they're different portfolios, right? And I think that that's kind of embedded in like the other thing that I'm trying to correct, where it says like, um, where it's not actually an exit, it is actually a latest. Those are two different things.
I think that should
Seems like
help you out there, Blake.
we're on the
I
same
think that's the
page.
answer. Yeah.
Um, and to be honest, like we just try to be as accurate as possible. Like one of the things that you'll notice about SMCI is like we didn't even take credit for like the aftermarket movement, even though we were holding, we were just gonna like wait for it to adjust. But we try to be very accurate, right? Because like we're not gonna take credit for an aftermarket move when like we don't do that for the rest of the stock. So we're not just going to assign it. And if someone wants to see like how honest we are about this, we actually, even though we were dropping Airbnb last year, we were shorting it. You can actually see right here, or you can look at it in 2023, and you could probably find the letter. And I can show anyone how to do this. Anyone that wants to just like check our work. Um, there's a lot of easy ways to do this, but we'll be able to see right here. You want to go in and look at like we want to find. It's actually easier. It'll probably be easier to do it this way. Let's look at this. Here. And I share this all the time. If anyone wants me to share it again, I share it all the time. It's like our diligence room. I might as well because this is honestly the best way to find anything when it comes to Prospero. Uh, we explained this, Jay. I don't know, like I don't think they have the same issue anymore. We just explained this. I don't know if you want to rewatch. Um, but so when you go in here, like I always say, like it's nice to look at the results. We go in here, right? And then you can actually go in. We're talking about an Airbnb situation, right? You go, it's very easy to track what we did. This gives you the picks, right? But like, I'm just going to look, right? So I believe this is the right one. And then this should be the right letter, right? And I'm just like looking after. So like one of the things that we did, I believe this is going to be the right one. So you'll see what we did here, right? We actually, even though we were dropping it, we traditionally just drop at the close price. But since there was such a big aftermarket move, we actually, to be honest in our reporting, took a bigger loss, right? Because even though we were dropping it on Sunday, we knew that the price had moved already. And we weren't going to just like pretend like we could get out of it at the close price on Friday instead of the aftermarket price. We just actually in that thing took the aftermarket price, right? But just so people know why we do this way, it's like I actually these complications are less than ideal. But like for the strategy that we pursue for the newsletter picks, I do like a lot of value investing. I'll pretty much like do like at least a day of reading before I even write the newsletter on Sunday. Sometimes I'll do it all Sunday and I'll sit down and start reading news in the morning and start writing in the afternoon. Sometimes I'll space it out and do more work on Saturdays. But like, yeah, there's a lot of work that goes into it, which is why we're kind of put in the awkward position of getting you the most accurate pricing that we possibly can um, over the weekend. But we are very honest about that. So that actually means two things. It meant taking the credit. We're actually taking a larger hit on Airbnb when we were shorting it, and we were like, look, we can't pretend like we could get out of it at the close price. When it moved after market, we got to take a bigger loss. Um, but the other thing that we'll actually do is like we knew we were holding SMCI, so we didn't take the aftermarket price there because we're just like we're holding it. We're gonna just show you what the market shows at open. So we try to be as accurate as possible. But yes, the reason there's an exit price on the model portfolio is because we don't write it over the because we don't write the trading letter ever over the weekend. There always can be a clear exit price. But for the newsletter, the most accurate way to do it is to do a latest date. Because when we drop things on a Sunday, the most accurate price we have, unless we have other data on what an updated after reasonable aftermarket price would be, then we just use the close because that's the most accurate market price we can use when we write it on a Sunday afternoon, if that all makes sense. We're going to get back to this before we do the model portfolio. Another marathon Monday stream. Although I'm just like gearing up for this, it's nice. I don't necessarily have to do as much work in the morning when I know we're just going to do the work live. Um, to a net bullish position. All right. We love sending out these extra letters. Sending that. Any other questions before we dive in on the model portfolio?
I don't see any comments. I do want to say though, I'm not sure if you know George, and for our people watching on Twitter, like when you share a link, it only is sharing it to YouTube. So um, for those people watching on Twitter, I don't know if we could solve that problem through our stream right now, but
You've got
there's
access to our
links.
Twitter, Stephen. Why don't you just post the same links on Twitter on the Twitter thread?
All right. I'm gonna share the diligence package we just shared on Twitter right now.
Share whatever we did. You can say we shared this, blah blah blah. Like share all the links. No reason not to. Getting everything all set up. We should change this to portfolio drops. All right. So as is tradition now, we will start off in the long tracker and see. Um, mhm, mhm. Anything concerning? Uh-oh. We definitely want to look at quite a few of the names. We've had Elf for so long, we might drop it. Yep, time to drop Elf. Oh, I think that's one of our longest holdings. Um, but for people to see, we have definitely been noticing. Um, this one's got an extra one for today. So I think we want to do, what was Friday? I believe it was 31. We're just getting a quick sector update so I can show you what I was seeing there. I believe we have on 3. I think it's actually. That's just 1 month. Yeah, we wanted 29. I just put in the wrong date. Just going back. That's right. And then we'll do 2. We don't want to mess anything up, right? So basically, what I have been seeing, consumer defensive has started to like definitely lag as consumer discretionary. So I think that's what's going on with Elf. And this is another reason this trend, we've definitely seen weakening in communications. That's why we closed some meta positions as well. So we're just gonna we do like to place this in where it makes sense, and we're just gonna say, um, can you look at how long we've held ELF since?
Let's see. 11/16/23.
It makes it one of those slam dunks, right, Steven? We're seeing, and when I say slam dunk, here, right? That's what makes it pretty easy for us to like just be like, nope, we've held it for a very long time, but that expression that we like to use, taking what the defense gives you, and it's just like, yeah, like right now it looks like the defense is giving us um just not as good of a not as reason as to be bullish on elf, right? So we're not gonna fight against those forces. Everything looks fine on KKR though. No panic button there. Let's look at anything else. We always like to look at this GWW looks like something that is that's interesting because we have very high net option sentiment, but we definitely have concerns everywhere else. That's going in the wrong direction. So let's see. Let's see what's going on with GWW. Um, this is a tough call. I think we're gonna stay in it, but we're gonna do what we always do on this thing, and like we've been in and out of this one a lot. We are going to vault it. That tells us that we might want to look at getting out. Okay. Anything else? We we got out of two of these this morning. It looks like maybe smartly. Oh god, triple elite. Very happy about that. Did we not get out on Micron? I thought we did. Might be time. Or not. Oh, it's a triple. We're gonna pull that one too. I don't want to think too long about it, but yeah. And this is like a really good example right here of like something that we just like how obvious the Prospero signals can be sometimes. Like I saw GE come in and I was like, damn, I've never seen GE like on the signal. So I was like, let's grab it. And that's just a really good example of just being like, even what we tell everybody, which is that if you get to know the signals, they'll help you. Like to me, seeing GE like appear on some of our lists, I was like, I never see that. Let's grab it. Like, and that was just a very obvious instance of being like, okay, like I don't understand. I don't recognize this behavior. It's anomalous behavior as far as I'm concerned. But it, it's behavior that makes sense to me in terms of just like, oh, this makes it obvious. And that's what we always like to say. Like we're looking for Prospero to make things obvious for us. That's how we do very well with this. All right, so that looks like everything on the long side. I do want to just take a look at I want to take a look at some of these doubles. Um, I think that's only one position, but I don't like that trend, and I don't like what's going on with consumer discretionary. I want to take a look at. I think I want to get out of all of my Adobe. Always doing this. Just not a good trend. Not a good trend. I do kind of want to rush and get this out now because I want to get out of those. Actually, I'm just gonna get out of Adobe right now. I really don't like the trend that I saw on that, and like I just want to get out and not wait until the end of the newsletter. It's just like too bad of a trend. Um, And then I might, what are the other ones? I might as well just exit the other ones that I said. Sorry, guys. This is how the sausage is made. All right, got that done. Let's just take a quick look at anything else. Let's look at SRPT. I do not like that. Yeah, getting out of that too. Are we in the plus on any of these? Well, 3 losses. Oh well, nothing you can do sometimes. Nothing you can do but get out of the bad pick. It's the best lesson I can ever teach you.
Cut your losses early.
Well, not necessarily early. Just be honest with yourself about
Quickly,
when there's
maybe a
no.
different
It's
word.
just more about being honest with yourself about if there's a real reason to think it's going to turn around or it's just a hope, right? I don't think there's a real reason looking at the signals and looking everything right now. SRPT was at 90 net option sentiment at the end of last week. It's at 68 now. The price is moving down. What's my reason for thinking it's going to turn around, right? That seems like
Mm,
clear negative momentum.
yep. You're not willing to die on that hill.
As I said, yeah, I am not. I'm not willing to die on the SRPT hill. I'm barely willing to be on the hill at all. Clearly, I don't even want to be seen on that hill anymore, let alone die on it. Just we're getting off the hill. No reason to be there. Um, oh, some power. Nope. We like that short still. We definitely like that short. Okay, that looks great. Might add another one. Ooh, 3. We always look at PPBI. We're doing that more and more, Stephen, where you say I never update things mid thing.
Yeah. I guess if the
I don't.
signals demand it, it's got to be done.
Yeah, we're not as big a rush on these shorts. What is going on here? I think we're fine there. It's glad we held that. Oh, I think we're gonna add another. Yeah, that's time sensitive. We're opening up two more MAXN shorts, even with. Tell me about. Well, I'm gonna do it live, but I'm gonna tell you. Actually, it's too important. MAXN is a 65 net options, but like it just um yeah, we're still opening up two more MAXN shorts. The timing just looks right. We're doing that live. Mm, actually, no, we're definitely doing that live. Always an adventure on these live streams. You never know what you're gonna get these days. And like, just so you guys know about this, like, and how I think about it. Um, Let me send this first. We like to get these out as fresh as possible. Um, because I seem to be doing so well lately, it's a good amount of time to like lean into my instincts. And we've made the comparison. Like, if you're sinking threes, you got to keep taking the shots, right? You can take them from a little deeper too. I got to be realistic about with myself about like when I might be putting up threes from too far away. Like, that's super important. And it's super important, like, when it comes to anything. But like, right now, I got to be letting them fly from behind the arc, pretty far behind the arc, because I'm hitting them. And if you're hitting them, you got to keep going. Like, don't be stupid about it ever. Um, but that's super important. And it's just like it just um it just makes sense. Like, it's the logical thing. If um if I'm hitting them, I got to keep doing it. It would be dumb not to. Uh So that's how I think about it. But I think about it on the broader scale, which is just like, well, like I gotta let them rip right now, but also like I gotta be really honest with myself if I'm losing momentum or if I'm being too aggressive and taking bad shots. Right? That's the balance. That's the constant balance between like playing into your strengths and um and also being realistic. It's a lesson that I always tell people, which is uh, be honest with yourself about your process and what you're doing, and the difference between known risks and too much risk. Right now, I'm taking known risks by just like doing something like I just did, which is just like firing off those shorts on on uh, on MAXN, even though I didn't look at it for very long, right? But I think the example of known risk is that I didn't add it to my newsletter picks, right? I could have. I might, take a little more time and decide that I want to do it after, but I don't like to rush into those newsletter picks, right? And I definitely saw some, perhaps some softening, right? We can look at 5. Like, it's definitely still looking good, right? And it's even down more since I last did it. So I might end up doing it, but when I make a newsletter pick, I tend not to rush on a live stream. I might still do it. I do actually like how this is looking. Um, I might I might do that now. Uh, but I'm gonna take a moment too as I just said, and make sure that I'm not rushing into it too much. I don't think I am. Um, but I do want to take a look at it. I do see a positive trend on the 1 minute when I look on Webull, um, especially in the MACD. So I'm gonna keep my eye on this, but there's not any rush. I got it in the trading thing. I'm gonna keep my eye on it. But yeah. So okay, I think I'm pretty much done with that stuff. Though. I might open up a new DEI. I did like the trend on the downward trend on DEI, but that's a pretty high net option sentiment. Um, anyway, just make sure. I think we're good. I think it's finally almost time to. Just make sure I'm saying that. Yeah. It's almost time to do the filter and then the screener and then be done. I gotta eat lunch. I'm starving. Do you get hungry during these marathon ones, Steven? Oh shoot.
On Monday,
We're
definitely.
we're about to run out of power. All right, we gotta do this. We gotta do this fast. I didn't move my power cord when I moved in here. So we are on a limited timeline, but I think we went pretty fast anyway. All right. Let's see. We made so many trades. We're really just like already during this thing. We're really just going to look out for any standouts. All right. All right. See if we can remember. We got 17 long and 19 short. Uh, actually, we're going to do. I don't know what's going to pull up in Slack when I pull it up. So instead of making my normal mistake of like potentially showing you one of my Slack conversations, um, I am going to just grab the metrics first, and then I am going to hold my screen again, build this last screener. Oh no, wait, I did want to see, we're doing tech still doing okay, so we don't need to target that. We might want to target, yes, I might want to target these more. I'm not sharing my screen yet, am I?
No. I'm looking at the market right now, and the SPY is up 0.01%. And I'm wondering, have you ever seen it end the day at zeros?
Um, I can't recall. Like, I'm sure it's happened. Um, I can't recall though, like to be honest. Like I can't recall a specific instance, but also like I'm not necessarily paying that much attention to that on a day-to-day basis. But if anyone wants to share a day that they remember, um, you guys are welcome. I do want to potentially limit some of these. Um, I think I want to target consumer discretionary, uh, and maybe even consumer defensive, uh, when I'm looking at shorts. But I'm going to do that in a different way than I typically do in a second, where I want to mix. Always place values. You know, I say that very often, but it's so important. We have been on this screen for a long time. We've used the same one. I think this is like the longest I've ever used any screener, but it works. Hard to ignore. All right, so we are going to do the short pressure. God, so much tech at the top. We're not really worried about that because we don't even particularly like. I'm not sure we're going to add. Can you tell me how many open NVO positions we have? Any open NVO BLK or BLK positions? Because I do think we might add an NVO for sure, depending on that. Good things going on in healthcare.
None for NVO. For
Oh,
BLK, it's loading. I think BLK is 0 as well. Yep.
oh God. We just got the battery warning. I don't think I can push it. I'll be right back. I don't want this to die. It would be very annoying. Luckily, this shouldn't take very long. Be right back, Steven.
Yep. Oh wait, we do actually have NVO and BLK. Thanks for everybody who's still watching. Be sure to like and subscribe. If you made it this far, you probably like what we've been talking about this stream. So likes are good for us. Subscribe, trying to grow the channels. Let's wait for George to wrap up the model
I'm
portfolio
back. I'm
update.
plugging in my power cord, so we don't get computer death.
We actually do have NVO and BLK. I was under the wrong tab for a second there, but we do have them.
Oh, we have one BLK?
We actually have 2 BLK.
Oh. That looks very positive, though. What's going? Anything going on with BLK? We're gonna still get it. We're gonna just because it's so positive and it's good to reflect. How many NVOs do we have?
I believe it was 2 as well.
They have big news today. Yeah, we're gonna get another one. And Nancy Pelosi. Oh my God, it's so funny. My girlfriend was texting me about Pelosi buying Pan West this morning, and I sent a text to her sister. I was like, I apologize. I apologize for what I've done to your sister. Like Haley would have never talked about stocks at all. That's funny. It's like tired about a Pelosi ad, but she's not wrong. She's not wrong about buying the Pelosi stocks. Obviously. All right. So what we want to do on the short side is we want to target. Tell me if I have any open. If I have any open. Woofs.
We do.
How many?
1 is open.
Let's check. What's going on? Woof. We're going the other way. We're closing it. There's something going on. There must be news. Oh, damn it. MAXN is down since we did this. I don't know what's happening with Wolf, but we're getting out of it. Some news event. We're going the other way, as we say. All right. if we own all this stuff? So how many CRIs, if any, do we have open? I think we have one Cracker Barrel. Right?
CRI, none open right now.
How about any ERVIs?
ERVI, no.
Leg.
Cracker Barrel.
I think we have at least one leg, but okay.
Leg, yeah. 2.
Okay. So no legs. Okay. How many, if any, okay, we definitely have some CRPIs open. Do we have any WHRs open? Any SABRs open?
WHR, yes, we have 1. What was the other one? S something? SRBI?
Yeah, we dropped this. We shouldn't have. SABR.
Yep, 1 SABR.
That's nice for us. Good. Okay. Well, that's interesting. Here's the ones that we've never even gotten into. Oh, just when we thought we were getting out, Steven. It's too interesting.
Mm.
All right, definitely Coles. We're gonna get in. But what we're doing here is like before we end up pasting, we just need to like Coles and Jacks. We need to make sure that we like aren't crowding with too many names. We're basically posting what we are gonna make moves on, like all of these. I don't know what's going on here, but it looks good. So that's probably enough. We've shorted this before. No. It's not enough. I think that's probably enough. Because I think we're shorting all this. Yeah, I think that's enough. And now we want some consumer defensive. We're just going to be way quicker about it because we don't necessarily want to load up as much on consumer defensive, especially because I don't know what's going on. Just treehouse food. No BTI. That looks good. Yep. All right. Go. Grocery outlet. I used to shop here in San Francisco. Okay, that looks great. I don't want to go too far. I do like that. Okay, TSN. Tyson. Albertsons. No, we don't want to load up on markets here. I think we're good. Sorry, everyone. We're doing it weird today. Now we just, all right, how many do we have left? Now we're going to do it. We're going to do it in kind of a silly way, just to get it done quickly. I do not advise to deal with your spreadsheets like this. So I want to get rid of this, just because I know we already have them. All right, so we're going to look at just these now. And then we're finally done with this marathon. All right. How are you doing, Steven?
I'm hanging in here, George. We still got a lot of loyal viewers, 17 currently right now. You guys will like the video for George's efforts. He's going a long way for you guys, so be sure to like it up.
Yeah, and you're getting a lot of free content that people normally pay for. Interesting. Oh, yeah, definitely. What's going on there? It doesn't matter. We're taking it. We're taking the flyer. We have some of that. That. Definitely don't need that. But that doing. We're always in and out of this. Looks like a good time for that. That's a better short-term trend than long-term, but we are done. We are getting the hell out of here. Opening up more shop. Opening up more shorts and longs, obviously. We're actually going to look. Well, I think we're just going to get this sent out, and the last thing that we're going to do is we're going to let you guys know. I think we might add Saba and and MAXN as newsletter picks, but we might look at adding one of these other, maybe Whirlpool as a short, like just because of what's going on with that. But let's just finish this first. Okay. We are done. All right. Exhausting, but we are done. Now, I believe we might want to look consumer defensive. That's one thing. I think the three that we did there were UNFI, Go, and BTI. I think Go looked pretty bad, but not as clear. Ooh, we got that on the 15-minute. Yeah, that's tempting. All right. We are going to do, I think we're going to add a Go short. I think we're going to add 3 shorts. Okay. MAXN. But, and then Whirlpool, I think. We're going to add all 3. Yeah, let's look at the 5. Yeah, we're definitely. We're going up on the 1. How about 3? I just don't. We're going to keep our eye on this today. We might do a quick exit on. All right. What was the third we wanted? And then we also wanted Whirlpool. Adding 3 shorts. Well, we might only add 2. Yeah, looking at that trend, we might just add these 2 for now. Mm, do we want? I want to take water. Go positive. I still think we're just going to keep our eye on it. We've got some room. We might close it out at the end of the day if we don't like that it hasn't moved lower. We're going to want some extra cushion on that. But we're definitely going to get into that geo short as well. Okay, so enter short geo. Okay, we are. We're getting into these trades. We might get out of that. Yeah, we're sending it. We can't. I'm not gonna. Too hungry to. I might exit quickly if we don't like it, but we gotta get out of here. We gotta. All right. Anything else?
Ready to call it?
Any
Just
other
for the
questions?
people that are so watching, Spotify link is down below. We'll be posting these live streams later on. If you can't catch them live in the future, go follow us. We're gonna be in person Wednesday, so that's exciting. I think that's
Oh
about
yeah,
it.
I forgot about that. All right. Thanks, Stephen. Thanks everyone
All right.
for watching another marathon one here.
Yep. We'll see you guys again Wednesday. Thanks for coming, everyone.
Bye.
Bye bye.